Okay. Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Thursday, August the 3rd. The year is 2023. Let's talk trading. Reasons for entry, part 3 with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. Walmal, as usual, the fastest 15 minutes of trading kind of got us again yesterday, and we just got done playing with some red news.
Yeah, we did. Red news will eat you up or will make you happy.
Yeah, it's been quite the morning though, hasn't it?
Yes, it has. It's been, I was talking, I think it was 2 days ago, talking about how the market's been pretty compressed and everything else. And here we are, we had 3 days in a row of 100 pips or more. Now, of course, you know, the going back one day further than that, on Monday, we only had 44 pips for the day, which is kind of comical if you think about it, how small a move that was. But we're starting to see a little bit of movement. Now, of course, this is also summertime, and typically, at least the pound dollar is pretty slow usually during the summertime. But that's neither here nor there.
Well, yeah. Well, plus we've had the end of the month. We've had some red news. What, 3 days in a row? We had two red news events today.
Right? And then Monday, I think the day that was compressed, I don't think there was any red news on Monday.
No, there
So
wasn't.
so, sometimes, people say, well, it's the retailers that move the market. Well, there's probably some truth to that, but the thing is that the thing that, as my grandmother would say, the thing that kicks it in the fanny is usually the red news. It gets it going in a particular direction, kicks it down the road a little bit, and get some volatility out there. And that's what we want as traders, or at least that's what I want as a trader. I want some volatility because I can make money on volatility. I can't make money if the market has come to consensus.
Yeah, it looks like we've got a nice green H30,
Yep.
M30, H30. That'd be kind of funny, huh?
Yeah. But anyway, we just crossed over to 75. Now, reasons for taking a trade. If we look down at the bottom, let's go back to, if you could go to an M1 chart,
Sure.
candle, uh, let's see, candle 9 was that last red candle, or black candle, I'm not sure what kind of candle you have on your chart. And then we hit the next candle after that was a bull candle. Okay, now the thing is, it's not a flip-flop box. And the reason why it's not it's a flip-flop, but it's not a trade I would take just based on that. And the reason why is because I didn't get a state change there. So I would not have taken the trade on that first bull candle. I would have waited to the second bull candle, because then at that point in time, still didn't have a state change. But the difference is, now you were talking about this a little bit earlier, but the idea that, okay, we finally get to the point where we're crossing the previous highs, we're getting a close above the previous high, and now I can go and actually take that trade. Yes, from the original trade, you're giving up maybe 3 pips, but it's a safer trade. But at the same time, what do you target in that situation? And that's part of what you have to think about. How do I make a trade? When do I make a trade? What are my reasons for making a trade? My reason I would target probably about 3.5, maybe 4 pips. And the reason why is because I'd be looking to think that the max that this thing is going to get to is 62.9. Obviously, very wrong, because we're above the 80 now. But the thing is, I set reasonable targets, and so I would have made 5 pips on that trade. And the reason why I target that area is, again, because that last bear candle, that's where the high of that was. It tested that area and rejected off of it. It rejected off of it, not just a little bit, but it rejected off of like 14 pips. That's a huge reject. So to me, it's sort of like, yeah, this time I was wrong, but more times than not, you look for little clues like that, and that's what I do anyway in terms of when I look for a trade or a reason for a trade.
Right. One thing you got to remember, broker and my broker paint these candles so differently because you said
Yeah.
you didn't have a state change, but because that red candle was a lower candle, the next bull candle was a lower candle, but then the next candle was a higher candle because the high was above the previous high and the low was above the previous low. So
And it's funny because
I got a state
yeah,
change.
yeah, you see on my chart, I didn't get a state change because the low was higher, but the high actually was at the exact same level as the previous candle, so I didn't get a state change.
That should
But
have been
it's
an
just
inside bar.
it should. Well, you're right, it should have been. Um, but I don't. You kind of alluded to this earlier when we were talking, and that is that these inside bars, a lot of times, they just don't seem to go and get explosions off of them. So not that I ignore them, but I don't pay that much attention to them. What I like to pay attention to is I get an outside bar.
Right.
That's when I start paying attention.
You know, it's funny.
And
It
I know,
seems like anything below H1, inside bars are almost non-consequential. It's the outside bars that really do it. Um,
yeah, and I think that part of the reason why is just because you know for our friends who like to go and call all this trading that we're doing at the M1 and M5 as noise, this market noise. Well, the reality is because there is so much movement down there, you can wind up with a bar that's not large, not a return bar by any sort, but large, and then the next bar it's consolidating, so it consolidates within, so it becomes an inside bar. And so it's just part of the movement. It's not really part of a breakout in any particular direction. So we have right now a flip flop with a state change, but we are above indicator two. I am going to go short here, just because we've had so many candles in a row going up. So I'm just looking to maybe get a little bit of a down draw, a downdraft. Just grab a couple of pips here. So I just went short at 81.3. We'll see what it does.
Probably go to the 75, which would
Yeah,
be
that's actually
yeah.
I got my TP set at 76. If I see any type of reaction to it where it's not doing what I want it to do, I'll probably just get out and scratch it. But right now I'm still in it, and I'm up a pip, a little bit more than a pip. 2 pips. And finally had it open below indicator two.
You're on M1. All right, let me switch
Yes,
over.
sir.
Yeah.
Okay. Went back up, so now I'm above indicator two. So now I'm thinking, okay, maybe this trade just not going to go work out. I haven't bailed out of it yet. Should have taken my 2 pips when I had them. That's the problem when we say that a lot, don't we?
Well, actually, after I got burned, I took 2 losses in a row before made the video, and then the last 2 trades, though, I think I had what was it, zero.9 and zero.1 pips, because as soon as I got in the trade, it's like, ooh, I better get out of this trade. I missed something, so. And it's almost like we're talking about reasons to enter. I think. Oh, I remember. You said you want to talk about reasons not to enter.
Yeah.
Hey,
Anyway, I just got out with 3.5 pips, so it turned out to be a decent trade. And the reason why I got out where I got out is because I set like I said earlier, I put my stop at 76.
you mean your
Just because I
TP?
know. Yeah. Sorry. Yeah, I put my TP at 76, and the reason why is because at 75, and a lot of times we'll just turn around and go back the other direction, and it doesn't necessarily have to even go and hit the 75 to go and do that. It's that thing where got to remember that I got to get out on the ask. I can't get out on the bid.
Right.
But my bid may go and hit it, and then but my ask never gets there. And finally, my ask got down to 75, which means that's a good sign that it's going to continue running down. But in any case, it was a nice little trade, and that's kind of what I look for. Just keep on doing that over and over. Do I win every time? Nope. But I'll tell you, my trade efficiency today is 79%, which means I won 79% of my trades today. That's a little bit low for me. But if you can continually win 79% and you're able to contain your losses, where you're not getting big 10, 15 pip losses, let's say you're taking 3 to 5 pip losses, and you're winning 79 to 85%, you'll be golden. But it takes practice, and that's the thing. It just takes practice. It's got to keep on doing it over and over again, and eventually you start seeing things. And you had made the statement yesterday in the video that and you had gotten this from somebody else, but you got to see where the market's going, and that's part of this. Yeah, we've got these indicators that give us these signals, but where do we think the market's going? If you notice, when I took that trade, I said, I'm going to get out at 76. I'm looking for this thing to get to the 75, so I'm going to get out at 76. Have that plan in your brain before you press the buy button or the sell button. For me anyway, what works is I've got an exit strategy before I ever get into the trade. And, and sometimes, and Kiro, you'll attest to this, sometimes I blow it, and I either A, I don't have an exit strategy, or B, I ignore my exit strategy. That's usually when I get into trouble. And that's probably true for most traders, I would think. But the thing is, for me, when I'm doing well, and like today, I'm doing very, very well. I've got 60 pips for the day, and I think my biggest trade was I got 8 or 9 pips on my biggest trade. So, and I only got one of them. The rest of them all 3 pip, 4 pip trades, and I got 20 trades on the table, or when I had 20 trades go across the table. So there's a lot of trades that really happened today to get there. But just over and over again, just execute. And you have to almost be like a machine and just go and do what you see and just plan it out. Know what you're going to do before you get into it. If you don't have a plan, as to how you're going to get out of the trade, what you're doing is a gambling at that point in time, because you haven't set up a plan for what you want to do. And I think that's we talk about to a certain extent trading can be gambling, but there's gambling where it's okay, and there's gambling that it's not okay. Not okay gambling is when you don't have a plan, you don't have an execution, or you don't have a plan to execute. You're just literally winging it. So if I'm going to go into this trade because I'm going to make money, that's not a plan. That's like walking into Las Vegas and putting your $5 or $10 into one arm band and pulling the lever down. What's your plan? To make a lot of money.
Oh, that's funny you mentioned that. Here in a little small town in Oregon, actually it's the next small town to the south, somebody hit $50,000 on the Keno or Powerball or something. I had friends, they actually, a friend of mine hit some Keno numbers. They cashed in over 22 grand a few weeks ago. Wow. Yeah. You talk about gambling.
Yeah, can it happen? Sure, it can happen, but that's gambling. That's not what we're doing here. What we're doing here is we're trying to go, looking at the market condition, looking at how the market is moving, making a prediction as to where the market's going to go, and actually seeing it go there, and then going and executing your plan based on that.
You know what?
We're trying to do. We're out of time.
Yeah, the fastest 15 minutes in trading is just about over. So once again, fellow traders, if you have any questions about reasons to entry or reasons to enter, let us know, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.